if you think about the MVP of what a bank offers you, it offers you a savings account. It offers you an ability to invest your money somewhere. It offers you an ability to borrow money and then spend it. So those are kind of like, that's the minimum viable thing that you can have to say like, all right, this is like what I need for my financial services. And that's stake, liquid, and cash. Stake is meant to be analogous, non-custodial, analogous to a savings account. You deposit your ETH, your BTC, USD, you get your native ecosystem yield. Liquid is analogous to an investing account in the sense that you can deploy your assets, non-custodial, autonomous, all that into DeFi. And then cash is your borrowing and spending tool. And soon, and we'll talk about this later, we've got another product on the horizon that fully really completes the picture of what Ether.fi is trying to build.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the co-founder of Ether.fi, Mike Silagadze. Ether.fi has long been a product known for its liquid staking products. It's long been known for the liquid vaults, which offer yield on assets like tokenized Bitcoin, staked ETH, or stable coins. And I think today is about the grand vision for Ether.fi to be a neobank, but one that is reimagining how can we have all of the benefits of a traditional bank on-chain.
Yeah, and we also dive into what is a neobank, what products and services are they offering to kind of differentiate themselves and cater to, I would say, this new on-chain user, but also expand into, quote unquote normies and capture that market as well. And then in the last half of the episode, we dive into all their plans that are emerging within the Hyperliquid ecosystem too.
I think today was a great reminder for why we should be using a product like Ether.fi Cash. For me personally, I don't like moving my money off-chain. I do have a portfolio off-chain, but I want to keep as much of my portfolio on-chain, being productive. And, whether that's liquid staked ETH or holding tokenized Bitcoin in the liquid BTC vault, or just holding stable coins, the liquid USD vault is earning something like 10.5%. Why not continue to earn that yield, but then be able to borrow against that value and spend it off-chain?
We also bring up ETH treasury companies with Mike and basically just ask him if Ether.fi is getting involved with supporting any of these treasury companies for yield under the hood in DeFi.
With all of the demand around these ETH treasury companies, you can foresee that there's going to be that much more value being deposited very soon in Ether.fi. But I think for us as, DeFi users, retail users, let's say, I'm excited for how they are leaning in to build a DeFi native product that is going to make a huge improvement for all of us in our daily lives. So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to stay up to date on all of our new posts through the Edge newsletter, but also get real-time notifications for the Edge podcast. You can also subscribe directly to the Edge podcast through Apple or Spotify or YouTube. If you go to our link tree, it's just edge_pod. But then otherwise, one final shout out to our sponsors. Thank you to the sponsors that make this show possible. All of the content that we make here through the newsletter and through the Edge podcast is always free. All you have to do on the newsletter is just submit an email. So everything is ungated. And if you go to our show notes, you'll find all of the awesome sponsors we have, folks like REDSTONE, Maple Finance, and so forth. So check them out, click on the links and learn more, and we hope you enjoy the show. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain Oracle layer. To learn more, go to REDSTONE.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional grade yield. Learn more at Syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge newsletter. FALCON Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Mike Silagadze, co-founder of Ether.fi. Mike, welcome back to the Edge Podcast. How are you doing?
Doing great. Yeah, thanks for having me.
So good to see you. So much has changed in the last few months. The key thing being that ETH has finally gone back up in price. It's got to be huge for you guys. And so I'm wondering, what has the repricing of ETH meant to you as Ether.fi?
Yeah, that's a good question. I mean, I think the impact is kind of broad in the sense that it just creates a ton of interest in the crypto ecosystem and people looking to own ETH and then, of course, stake it. There's so many things that are driving this narrative shift. I think many of us in the Ethereum community have been kind of wondering, all right, when is this going to happen? We kind of look around and say, this is clearly an underpriced asset. It's not getting the love it deserves in the markets. And now seeing that finally start to happen is exciting. I think certainly that's been driven to some extent by these various treasury companies that have been launching, like SBED and others. And then again, that just creates a ton of public awareness about what we're doing. So it's been hugely beneficial.
Mike, I saw a comment on Twitter the other day. I think it was Devin from GammaSwap, and he basically just randomly called out, "Hey, how did Ether.fi manage to grow their TVL after the restaking kind of hype cycle?" A lot of these restakers, their TVL went down after that restaking hype cycle, but what did you guys do to kind of keep the trajectory going with Ether.fi?
Yeah, that's a great question. Since our token launch, usually, most of these DeFi protocols, TVL peaks, then token launches, and then this sort of a slow bleed out over time. Our TVL is now, I think, 4 times higher than when we, when our token went live. And it's generally, we're hitting all-time highs on TVL, on revenue, on users, pretty much, weekly or monthly. And it's, unfortunately, there's not a very satisfying answer. I wish it's I would just do this one thing and magically, you'll be successful. Because really, that's the question could be almost reframed how do you build a successful product that people actually want to use? And it's not one thing, it's 1,000 things. And it's a maniacal, obsessive kind of 24/7 focus on just making a good product, signing great partnerships, being a good partner to those folks, building on trust that's developed in the ecosystem. To that comment, I replied to that comment and I said mostly that, and I also said, look, it may sound weird, but you actually hear a lot of successful projects say this, that we just really weren't that focused on our competitors. We weren't looking at okay, what's going on here or there. We were really just focused on building a great product and understanding, I guess, the market dynamics we're in, and just making sure that we were able to sustain that growth after the TG.
Yeah, you could probably write a book on all the things that you guys did to maintain your success and not only maintain it, but just fuel it going forward. There's a ton of things I want to talk to you guys about today. There's this emerging neobank vision. There's a ton of stuff that you're leaning into with Hyperliquid. But I think before we even get to those things, you're talking about the products you've been building. Let's just kind of level set and look at what you kind of offer today, can you break these down for us? It's stake, liquid, and cash. These seem to be like the core pillars of Ether.fi as it is today. Can you explain what those are?
Yeah, I mean, I actually think it makes more sense to talk about the broader vision, because then everything sort of fits and makes sense as part of that. And many people, as we've sort of started talking more about this, the broader vision that we're trying to go towards, many people have framed it as a sort of a kind of pivot from liquid staking. So as we started talking about this concept of a DeFi bank, which is a banking alternative, that lets you live your life, your financial life on chain. People talked about that as, us kind of like changing gears and moving on to a different narrative. And the reality is, actually, if you look at our Series A pitch deck, which I think you guys looked at back when we were raising it, this was almost 2 years ago now. It was right there. It was literally, we had stake, liquid, cash, and we said, we're going to build a vertically integrated DeFi platform that's, I don't know if we were using the Neobank term at that time, although I remember thinking it, so maybe we did use those exact words. But the idea was a vertically integrated platform that, gives you everything you need, on chain. DeFi today consists of thousands and thousands of very narrow, specific products, right? They only do one thing. And that is normal in a market that's, in very early stages of development. But as a market matures, customers want products that are more integrated, that just like solve their problems. Like, no, you don't want to have to sit there, building your own computer from scratch or, whatever. You really just want something that just works. And so that's really what we've been building towards. So if you think about the MVP of what a bank offers you, it offers you a savings account. It offers you an ability to invest your money somewhere. It offers you an ability to borrow money and then spend it. So those are kind of like, that's the minimum viable thing that you can have to say, like, all right, this is like what I need for my, financial services. And that's stake, liquid, and cash. Stake is meant to be analogous, non-custodial, analogous to a savings account. You deposit your ETH, your BTC, USD, you get your native ecosystem yield. Liquid is analogous to an investing account in the sense that you can deploy your assets, non-custodial, autonomous, all that into DeFi. And then cash is your borrowing and spending tool. And soon, and we'll talk about this later, we've got another product on the horizon that fully, like, really completes the picture of what Ether.fi is trying to build.
Mike, with the stake product, can you talk about, like, how do you differentiate from what else is available out there? And like, what do you think has been a recipe for the success you've had in growing liquidity there? Because, like, ETH is, I don't know how many billions are in it right now, but, like, there's a lot of, alternatives out there that they went up in number and they went back down in number eventually. So kind of going back to, like, what we talked about with, like, how you maintained all of this TVL, like, there's a lot that's gone into this. And that being the flagship product, that was what we knew you for as Ether.fi to start. I'm just amazed at how sticky that liquidity is. Maybe too, that's a result of all these other products you're building. So
yeah, I think the main reason, so it's about $10 billion. I mean, give or take, obviously depends on the price of ETH that day. I mean, the big differentiator on day one was restaking, right? I mean, there was, I don't know, a dozen different staking protocols out there, different flavors. And we pretty early, I mean, this was the reason we chose to start with stake, actually, rather than any of the other products. Pretty early, we said, all right, look, staking is the largest category in DeFi. And there's this new concept that was emerging, called restaking, that we thought was a big differentiator and would allow us to capture a bunch of market share and use that as a basis to build a broader platform. So that was and for those of you that, for the folks that were around over the last couple of years, there was like the restaking wars and the LRTs and Pendle and all this like madness that went on in the crypto world. And a lot of that was just, sort of like hand-to-hand combat, day-to-day, just making sure that we stayed top of mind and continued to grow. The reason that it's become sticky was, one of the, I think, good decisions that we made very early on was we put kind of an extreme focus on integrations. So we focused on getting integrated into every single DeFi protocol out there, and getting on every chain. And so now we've got, I think, like 500, literally 500 different integrations, and we're on basically every chain. And that's made it sticky. So on, for example, on even on Ethereum, on mainnet, I mean, we're substantially larger. I mean, the only asset where there's more of it is ETH. So we're by far the most widely used asset in DeFi, and Arbitrum by far the most widely used asset on Base, and so on. So I think that's what one of the reasons that's made it sticky is it's portable. You can use it anywhere, and it's got the best yield.
And then I guess moving up from stake, you've got the liquid suite here, and you're offering kind of all the big blue chips of BTC, ETH, USDC, and then eventually HYPE. I guess kind of speak to the importance of that, how that kind of ties into, I guess, then cash.
Yeah. So if you think, if you imagine, Ether.fi as this alternative to, traditional banks or alternative to a traditional savings account, what we want to offer the service that our customers want, the users that want, and what assets the users want to hold. There's obviously, a very long tail of hundreds and hundreds of different assets that people want to, have exposure to. But the number one are going to be, ETH, BTC, USD, and Solana, and now HYPE. That's basically the bucket of things that cover like the, 90% of people's portfolios. So that's what we're working towards. We originally were actually going to launch the Solana stuff first. But Hyperliquid has been taking off and has been having so much success that we actually ended up changing our roadmap and prioritizing that before Solana. But that's Solana is coming as well.
Mike, can you also walk us through like the third pillar in your product suite, what we call cash?
Yeah, so cash, the right way to think about cash is it's actually a vault. It's a smart contract wallet that you control with your own private keys that can be tied to a passkey or whatever. So that's actually what cash is. It's this vault that can then deploy, if you approve it, into the various liquid vaults, into ETH, into BTC or whatever. Attached to this smart contract wallet is a credit card. So this is a card program that allows you to draw money directly, stable coins, directly from the vault to be able to actually use that in your day-to-day life. Or the vault can borrow stables on your behalf. So if you've got you've got $10,000 in your portfolio on Ether.fi, the vault can just borrow against those assets, and then the card can then spend those borrowed dollars. So that's the idea of cash. It really just makes your crypto useful in real life, right? Otherwise, okay, you've got a bunch of money, you've got some ETH, you've got some BTC, number go up, and like at some point you actually want to do something with it, and so this is the thing.
There are two different ways we can spend with cash. There's the direct pay and then the borrow mode that you were just talking us through. Do you have any idea, Mike, like what percentage of users are opting to use direct pay versus borrow mode, or any feedback from users? Basically, like, can you talk to us about like what are the benefits of either?
Yeah, I wish I had precise numbers. The majority of people are using direct pay, so they're just spending stables. But what's actually very common is people are depositing into the liquid vault, because you can actually, one of the vaults in the liquid product is a USD vault. So it's just you deposit, let's say, USDC stables into it, and it deploys it into DeFi and then earns some rewards. Reward rate maybe is 10%, let's say, give or take. And so you're earning 10% on your USDC on the assets in this vault, and then you could just use that as the basis to borrow dollars, right? Because you're borrowing at, let's say, 4 or 5%. So you've got this, this advantage, kind of an arbitrage. Or you can just spend that vault. That's actually what I do. Is I just put all my dollars into this vault, and then I just day to day I'm earning and spending. And that's what most people do. We do have it's not a large amount. I think it's only about $2.5 million that's been borrowed across all our users. And obviously people borrow and like pay back, but the versus, like orders of magnitude more than that in spend. So the majority of people are just spending. A small percentage of people are borrowing against their assets.
Mike, one thing that I'd consider using cash, and, I'd recommend to anyone, like, obviously, like, think about, what you put into that account, because, like, you got to think from an OPSEC standpoint in crypto. There's just, whatever, we're all targets, unfortunately. One of the things I had thought about is just, like, what if I swipe my card and there's one of those, like, scammers that's put like a reader in there at like a gas station or something like that. Can you just talk to us about like how does the Ether.fi cash card like handle that? It's a concern for me only because this isn't a credit card to me. It's more of like a debit card based upon my assets on chain.
Yeah, for sure. You can, most people use it that way. So the short answer is, it has all the same normal protections that any normal card has. So you can do chargebacks, you can do reversals if a merchant was fraudulent. It's exactly the same process with Ether.fi versus any other card. And you can put limits on the card. So you can put like a daily limit on the card or on the whole vault, monthly limit. So you can play around to put some protections there. Because look, we have users that have millions of dollars in vaults, in these vaults, and you want to make sure that, if they lose their card, that it doesn't, someone can't just drain it. So that's why those limits are pretty important, even if you can get the transaction reversed.
Mike, I'm curious how many users you've had sign up for the cash card, and maybe, I don't know if signups is the right way, but like maybe like how many users, and do you have any, like, does the team have any internal goals of maybe what you want to see in the next year, like any sort of growth goals that you're looking at?
Yeah. So what so the short answer is we had about 40,000 membership signups so far, which is a good start. It's been about 2.5 months, maybe 3 months. And it's growing, really nicely and steadily. We've only recently started to do marketing around the product. So far, all the growth has been either word of mouth or some KOLs that have talked about it. Our internal goal is we want to get to about 100,000 daily active users on the card by the end of the year, which I think, I feel like that's a very achievable goal at this point. At that size, especially because crypto users are maniacs. There was just a tweet about this recently, where someone showed the comparison between Hyperliquid and Robinhood. And right now, the trading volume is like 1-to-1 almost. They're like very similar trading volumes on a monthly basis, which is kind of insane when you think about it. Because, CryptoDex now has the same trading volume as like one of the biggest fintechs out there. But the number of users, Robinhood has about 26 million users, whereas Hyperliquid has about 80,000 users. And so crypto users are just maniacs. There's like a tremendous amount of volume in trading per user versus a traditional fintech. So similarly with us, with a relatively small number of users, we're now doing about $500,000 a day in transaction volume, which is actually getting to be pretty material. The largest crypto card programs do like mid-single digit millions per day in transaction volume, and that's like the big ones that you might think of. And at the rate that we're growing, I really think we'll be around that size by the end of the year. So I think we'll be the largest crypto card program pretty soon.
Wow, that's incredible. I'm curious. We've kind of talked through all the components. Like what is like the grand vision here for you guys? Like putting all this together, and then and also like what does it take to pull users away from their traditional banks entirely? Like me just kind of thinking through this, I'm like, well, I still pay bills out of my traditional bank account. There's like a ton of things that keep me there, right? But is the ultimate goal to you want to bring people over to the neobank completely?
Yeah, 100%. I mean, we think this is the future of financial services. It's going to be self-custodial. It's going to be much more global and much more open and composable versus what we see now with traditional players. So, yeah, I mean, I think this is just a much better alternative to traditional banking. Look, it's not. I think if you play it forward, like let's say 5 years from now, I don't know that everyone's using a crypto DeFi bank as an alternative, but I think we'll have tens, maybe hundreds of millions of people using it, and I think it'll continue to grow incredibly fast. And the reason that it's going to do that is just because it's a better product. So if we were, this is all kind of analogies here, right? But if we were a fintech, a traditional fintech with let's say $10 billion in assets, in deposits, we would probably be maybe 300 to 500 employees. Like that's the size of entity you need between like all the ops and compliance and engineering and infrastructure and all this stuff that you need to operate that kind of entity. As Ether.fi, I mean, we have I think 29 employees right now. So I mean, you're talking about more than an order of magnitude difference in efficiency, and we still have compliance, we have legal, we have engineering, but there's a lot that you don't have to do if you're non-custodial, which is I think correct and it's significant advantage. And we get a lot of infrastructure for free by just operating on the blockchain. There's a lot that we don't need to do when it comes to custody and even some of the security aspects. You get a lot of it you get for free in terms of the settlement and control. So that what does that translate? Like, who cares, right? But the reason that you care is because those cost savings end up getting passed down to users. So instead of the user paying, effectively, like you think your bank account is free, like it's not free. If you keep or do anything with your bank, you're paying hundreds, maybe thousands of dollars a month, depending on how much, what you're doing with your bank. So instead of doing that, we can charge, tens of dollars a month for the user, again, directly or indirectly. So it just ends up being cheaper for the user. And because it's a much more open, composable ecosystem, you get access to rewards, investment opportunities that you wouldn't be able to get access to from a traditional, fintech.
I had a few different Ether.fi wallets back in the day that I was, doing some farming with, but I set up a totally fresh wallet for my cash that I've set up. And that happens to be a hot wallet. So is my security in any way tied to that hot wallet?
Your security is tied to the passkey. I assume you created a passkey when you when you created the account. So that's
right.
Actually you can attach. I think that feature is there. You can attach a hardware wallet or hot wallet or whatever that's like a cosigner. But if you haven't done that, your main security is your passkey.
Okay, so if I lost control to that cash account, like that EOA,
it's a passkey that uses a TEE, trusted execution environment, hardware enclave to store your private key, and your passkey, which is protected by Apple, is how you sign transactions with that private key. If you lose access to the account, there is a recovery process. So there's a couple of entities attached to it, to each account, that can, if you allow them, allow you to recover your account. We're going to be releasing a much more comprehensive thing on this soon, where you can assign. You can either say, no, I don't want recovery. I want this is it, kind of ride or die on this private key. Or you can say, okay, here's 5 entities I'm going to allow to recover my account in the event that I lose access. So the intent is for this to feel much more like a normal, bank alternative, where if you lose your bank password, you don't lose all your money.
This is what I want. Funnily enough, I'm actually almost sick of and almost too scared of doing this fully custodial fully on chain, hack, phish attempts. We've probably, a lot of us here have been our own bank for almost too long, to the point where I'm I actually want a bit of a hybrid custodian thing.
Yeah,
you know what I mean?
Right. You want a safety net, right? Exactly. That's such an obvious, that's just such an obvious thing to so on. It gives you the benefit of, look, some state actor can't come in and just take all your money, but you can initiate a recovery process with, people that you trust if something happens.
One part of this, though, we've left out is the ability to get fiat into stable coins. What do you offer right now for folks to be able to get their money on chain, or what are you planning next?
So we just shipped this feature. I mean, this is it's only available in beta, but will be released broadly probably next week. I guess by the time this podcast is live. So you can, we have a Plaid integration, so you can get money in from any, bank account, from your US, Canadian, Euro bank account. You could just deposit it into a virtual US bank account that you're provided. And it just automatically gets converted into stables. So you wire fiat in, it just gets converted into, fresh organic stable coins. And then you could send money out. So again, similarly through a Plaid integration, you can just do, wires, ACH, SEPA, I think it's called, to send money into IBANs. So all that is available now, and we're certainly working on multi-currency support. I mean, that's probably our number one most requested feature. People want to be able to hold and spend and use and send euros, sterling, Swiss francs, all that stuff. So all those are coming soon. So we have those fiat rails, and that's that's a never-ending kind of integration battle, because there's literally hundreds of local payment systems that we will want to get integrated with, from PayPal, Zelle, Venmo, Cash App, Pix in Latin America, WeChat, Alipay, et cetera. So all this stuff is something that will be an ongoing process to just make it easy for money to flow in and out.
This episode is brought to you by MANTLE, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, MANTLE is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi.
Mike, you were telling me a little bit about your vision and plan with tokenized stocks, but I'm honestly not fully up to speed. So can you kind of give us the alpha here on the pod? What's your plan to incorporate tokenized stocks into Ether.fi?
So this, there already are out there, at least one that I know of that provides the ability for users to have tokenized stocks on chain that are sort of permissionlessly held. But there's more that are coming, and so we're evaluating all this stuff as it's being developed. I think it's very likely that by the end of the year we're going to have tokenized stocks integrated into the product. So you'll be able to hold your tokenized Tesla shares and borrow against them and do all the stuff that crypto degens want to do.
Mike, do we know what will the tokenized stocks be built on? I guess I'm wondering what protocol will be used to offer tokenized stocks.
So it's all going to be available on Ethereum, of course, but we're still having these conversations, and frankly, most of the products that are going to be really good fit for Ethereum haven't been launched yet. We're hoping to be launch partners with some of the folks that are working on this stuff. But nothing concrete to announce yet.
Borrowing against your tokenized stocks is like that. I mean, it's funny because I haven't cared about stocks forever until about the last like maybe 3 months. Like crypto related stocks are so exciting to me again. So, you know, my head's gotten back into stocks and now that is like a big value add to me again. You know, also like Coinbase, just coin stock going to the moon, and Galaxy, and, you know, all the treasury companies. So yeah, it's really cool.
Tokenize the treasury companies and let's put it back on crypto.
Yeah.
Just keep looping it, you know?
No, you're definitely, though, hitting on like a pain point for on-chain investors. I don't like moving my money off-chain. You know, I do have a portfolio that is off-chain, and it is painful to be moving money back to a bank account and then moving it over to something like a Robinhood. And I was actually just the other day doing this, that I wanted to buy a stock, and I'm just like, I could instantly buy that stock on chain if someone just offered deep enough liquidity and some reliable tokenized stock, but have the option to be able to maybe borrow against it, spend it through my Ether.fi cash cards. So anyways, I'm excited for that.
So I've noticed this like big intentional push into the Hyperliquid ecosystem by Ether.fi. Like, what can you tell us about what you're doing there? What are you up to in Hyperliquid right now?
Yeah, so we just announced this on our last analyst call. We haven't been super public about it, but we will be once we're actually ready to launch it. We don't tend to talk too much about forward-looking things. But yeah, we just announced this, that we're going to have a fourth product called Ether.fi Trade. And it is going to be built on using builder codes on Hyperliquid. As part of that, or the first step of that, is we've partnered with a protocol on Hyperliquid called HYPEBT. And we're going to be jointly launching an LST, so a stake type product. And we're, super bullish and excited about HYPEBT and what they're doing. We think that's the right approach to getting plugged into the Hyperliquid ecosystem. Is we want to work with a partner that's already operating in that space, can work on all the integrations and really, be on the ground, I guess. Whereas Ether.fi, I think, just naturally just doesn't have that credibility in like a completely different ecosystem. So we think this is the right approach to doing it. But the benefit of having this, partnered LST is the way that Hyperliquid works is you can actually offer trading rebates to users by using this staked HYPE on behalf of customers to give them reduced trading fees. And that's where Ether.fi would generate revenue, is by just taking a portion of those savings that we pass on to our users. So from a user perspective, they're going to be able to trade spot and perps within the Ether.fi dApp and within the mobile app. And they'll be able to do it with lower fees than they would if they were just trading directly. And of course, we also think that's a huge revenue opportunity for us. So you'll be able to, if you have like a portfolio of ETH and BTC and whatever, you'll be able to just use that to either buy spot on Hyperliquid, buy tokens on Hyperliquid, or open up perp positions. So it'll be really nicely integrated all in one thing.
Man, there's so much there. I want to ask you first. So you're venturing into trading and perps. I guess, how does like your marketing efforts change, or how do you become like a distribution funnel for that side of the business now? When it's, I mean, it's all kind of related. You're still always talking to or trying to bring on crypto natives and whatnot. But yeah, how are you thinking through that side of the business now, kind of going forward? Is like, now you've got this trading arm as well. And also curious, was this always a plan too? Or is this like a fortuitous thing where you're like, hey, Hyperliquid's got these builder codes, why don't we use them? This is like a great idea.
Yeah, that's a great question. So it's been pretty obvious that at some point we need to incorporate swaps and then eventually on-chain perps in the app, because it's just so obvious, right? Like, people don't just want to own, BTC and ETH and HYPE. People want to be able to use, to participate in other assets. So this is a very logical thing for us to go down, especially because, look, our user base right now is DeFi natives. That's going to expand, right? We're already, now that we've released these fiat rails, where you can send money to and from bank accounts, we're already actually seeing the first trickle of users that they're not funding the account through on-chain crypto. They're funding it using their bank account. Maybe a friend told them about it. I don't know. So we're already starting to expand a little bit to the normies, but the core fanatical user base are DeFi natives. And this is what DeFi natives want to do. So we want to make that available to them. And then as we scale up, we'll go, I think, initially to the CeFi users who are crypto fanatics, but they don't want to touch DeFi because it's weird and scary. And then we'll start really broadly going after the normies. So the way we view the user acquisition strategy is all 4 products now are channels to acquire users from. And then as a user comes in from from one product, maybe from staking, maybe from liquid, maybe from cash, we obviously then introduced them to the rest of the product suite and then sort of cross-pollinate. And that's a playbook that's been around for centuries, really, this sort of vertical integration strategy, because it makes it cheaper for you to acquire customers, and it makes your customers a lot stickier because they use you for more things.
Hey folks, I want to tell you about our sponsor, GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to GEARBOX.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
So Mike, just to reiterate, with this new Hyperliquid vault that you're launching or about to launch, this essentially means that all the cash users will be able to borrow against their HYPE or spend their HYPE now going forward as well. Am I thinking about that right?
Yeah, so there'll be 2 products. There'll be the HYPE LST. So if you just want to hold HYPE and earn whatever it is, 2% on it, you'll be able to buy HYPE within the vault and borrow against it or spend it. And there'll be a Hyperliquid vault, which will be a DeFi strategy vault on Hyperliquid. And these days, obviously there's tons of new projects, lots of, Pendle just launched on Hyperliquid. So the yields are quite high. So you'll be able to have a DeFi strategy vault on your HYPE and then use that to borrow against or spend. So all of that is coming within a matter of weeks. So we're trying to get these out as quickly as possible.
So we just want to switch gears for the last few minutes here to talk about the growth of ETH treasury companies, because these are publicly traded firms that are buying up massive amounts of ETH and then they're staking the ETH. And so it's a perfect setup for them to be making use of Ether.fi, earning like maximum yields, maybe borrowing against those yields. So just curious, Mike, are you all working with anyone or attempting to work with these folks? What should we know?
The first thing to know is that there's so many of these, and not just ETH. ETH seems to be by far the dominant asset. We've seen, a dozen different variations of ETH treasury companies now coming to market. It's absolutely wild. I don't think the market's priced in just the impact that all of these are going to have, because they're going to be buying tremendous amounts of ETH. And the other thing that I don't think is priced in is that the TradFi world, the public markets, just do not know about DeFi. They don't know about yield farming. They don't know about the airdrops. They don't know about this stuff. This is alien technology. And when the TradFi markets find out about yield farming, their heads are going to explode. And I think that's going to create an even more powerful positive feedback loop around Ethereum, because people right now in the broader public markets think like, okay, you know, BTC, ETH, XRP, ADA, yeah, okay, this is the big one. These are like the, you know, alternative ones, and they have a brand and a whatever. There's just, I think there's very limited, almost no understanding of, like, on Ethereum, there are many thousands of very large businesses, some doing hundreds of millions of dollars in revenue, like foundationally built on this blockchain. And there's all these crazy, you know, mechanisms and incentives and games. I think when the public markets find out about that is, I mean, I really think that's going to be the breakaway moment for Ethereum. That's what I've been waiting for, I guess, as an ETH investor for a while. I just, almost in frustration, just trying to understand, like, why doesn't anyone get it? Like, this is, you know, NASDAQ versus gold. Like, yeah, gold is cool, but like the NASDAQ is the NASDAQ. Like, it's much more interesting than, you know, sort of a passive, you know, holding asset. Okay, so that's my bull case for Ethereum that I've been talking about for a while, and I'm excited to see it play out. And of course, you know, obviously the ETH ETFs can't really participate in any DeFi stuff. They can barely stake. Maybe they'll stake 10% of their ETH, maybe just enough to cover the fees, which is frankly not even good for the ecosystem. But treasury companies can. And so I think actually a lot of the assets flow from the ETFs into these treasury companies because they're just much more interesting, in many ways, sort of productive assets. So I think that's super bullish for Ethereum, and obviously as like one of the leading staking protocols and the most widely integrated protocol in DeFi. We're talking to all of these guys. These deals are all in flight. Hopefully, we'll have something to announce in a matter of weeks or even days.
You know, I know you're talking to these companies, but how would that look if you partnered with them? Would they just hold ETH? Would somebody enter the ETH liquid vault, for instance? Maybe can you explain what that could look like?
So all of the above. I mean, there's a whole spectrum. Again, these DeFi strategy or digital asset treasury companies are a very wide spectrum, from very conservative ones that are, they want to run their own validators and that they want to be like really just sort of purist on that side, to, some that are talking about holding portfolios of NFTs. So there's a very broad spectrum here, and they are, all of them are going to participate in DeFi to some degree, and so that might mean, just holding wrapped ETH because, hey, it's restaked and has great yield, to looping it on on Aave, to participating in the liquid strategy vaults, to doing some yield farming. So all of the above. All of this stuff is coming, and Wall Street is going to lose their mind over this stuff.
When will Microstrategy consider dipping their toes into any Bitcoin yield? I don't know if you've even thought about this with eBTC, EBT sitting there. Again, I don't know what the yield is. I don't know what restaking market has gone to with Bitcoin. I don't know if it's still even flourishing, to be honest.
I think the yield is just about to get turned on, is my understanding. I don't know. I'd be very surprised if MicroStrategy started dipping into DeFi stuff. I just think they're so focused, and they seem to be able to get such a tremendous amount of leverage just with debt and just running the loop that way, that I don't know that they need to. I think they're getting higher. It's not Bitcoin yield, but it's sort of issuing shares or using debt and levering up on Bitcoin. So they seem to be doing pretty well there. I'd be very surprised if MicroStrategy starts doing any kind of DeFi stuff.
I don't know. It's probably just a matter of time before a competitor to MicroStrategy though does it.
Well, that's a differentiator potentially. If you want to be a Bitcoin treasury co, you can be a DeFi Bitcoin treasury co. There's going to be all flavors, right?
If I were running one of the Bitcoin treasury companies, that would be the way that I would lean in. It's not about trying to compete with Microstrategy, because Microstrategy is its own thing, and it's, its unique feature is Sailor at the end of the day. Like, he's able to raise $1 bazillion and just keep raising more money to buy more Bitcoin. But why wouldn't you want to potentially get exposure to one of these vehicles that is then using something like the liquid BTC vault through Ether.fi, or earning Bitcoin yield in other ways on chain? So anyways, it's exciting.
One, again, partner of the Edge podcast, Maple, they've been generating like 4 to 6% on their BTC yields with, I think it's Core that they're partnered up with. And from what I know, that's quite scalable as well. So, I mean, yeah, once more of these, I guess Bitcoin maxis even find out what they can do on chain with DeFi, I think it's still going to blow their minds, because I still think there's a lot of people with their head in the sand, including like most of TradFi, most likely. So,
well, guys, I think this is a great place for us to start to wrap up. So I want to remind our listeners they should learn more about Ether.fi by going to Ether.fi. They can follow the Ether.fi handle on Twitter. It's just Ether_fi. And then be sure that you follow Mike's account as well. It's Mike Silagadze. We'll put all of that into the show notes so you can easily find it. And then, Mike, thank you so much for coming back on. Always great to see you. Really excited for all of the product updates with Hyperliquid. And then I'm personally using that Ether.fi Cash Card, and I actually need to start linking some of my wallets there. So in case anyone has multiple wallets, they just shipped a new feature where you can link multiple wallets to your account. So if you've been stacking points through the app using different wallets, I think that'll all be solved here, right, Mike? By just being able to connect all of those. But any final word for us, Mike, before you go?
Yeah, I think we covered everything. Always good to be here. Thanks.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.